What is going on, y'all? This is Pay Me in Dividends, and today is July 6, 2025. Welcome back to the channel. If you're new to the channel, I talk about income generating investments through the stock market, more specifically using dividend ETFs. Now, today we're going to talk about ULTY, ULTY from yieldmax. Now, I'll be honest with you guys. This is an ETF that originally I was not a fan of. If we zoom out the chart, we can see exactly why, right? It goes straight down. However, you'll notice a change here around April, right? A couple months ago, it has actually appreciated in value around 15% from early April up until now in July, all right? So there's a couple reasons for that. The main reason is yieldmax as ETF managers have had great situational awareness, right? They observe the market and then they work diligently to pivot and change, and that's exactly what they did with ULTY. So now they've kind of changed the strategy, adjusted to the market. The yield has came down from originally ULTY used to pay over 100%, more or less, as far as dividend yield. Now it's around 79%, but they made much needed adjustments in order to protect the share price of ULTY. And again, as of recent, we've seen the results of that. All right. Now, one of my favorite things about this is you'll notice that in the beginning, since 2024, this was a monthly paying ETF. Now, you'll see here in March, when they adjusted their strategy, they went to paying weekly. And if we go back here, you can see the fluctuation in distributions here, right? It was extremely volatile, which for me personally, unless it is my Misty holding, I like the majority of my portfolio to be a lot more predictable as far as income is concerned, because at some point I do plan on using this income to pay for my expenses. And so it's a lot easier to budget when you have a more predictable distribution. So we can see back in 2024, there was a big variation in dividend payouts. You have $1.20, 99 cents, 78 cents, 98 cents, 82 cents, 57 cents. It was all over the place. Now you'll notice once they switched over to weekly and adjusted their strategy, every single weekly pay has been around 9 cents per share. You can see it dipped to 8 cents per share in April, then back to 9, 11, 10, 9, 9, so on and so forth. So the fluctuation has really tightened up, and they've really tightened up that window of distributions, which I think is amazing for anybody who wants to actually withdraw some of these dividends and use it, to pay for some expenses. So that is probably one of my favorite changes that they've made, along with obviously the share price going up since around April. Now, I want to show you guys their holdings, which you can download here. If you go down to their holdings, you can hit download holdings, which I already have downloaded here, and I've already filtered out the good stuff. So what we have here is I have it sorted from largest market value all the way down. Obviously, they have some government funds here. That's just cash on hand, which allows them to perform these options. But you'll notice here, there's a lot of different companies that they're doing options on, right? They have Robinhood, Tesla, Reddit. These are all companies that we're familiar with that are highly volatile. Palantir, Coinbase, MicroStrategy. We all love MicroStrategy. We have TQQQ. So we have a lot of companies that we're all familiar with, and they are performing options on them. and they're performing options differently than when they originally started. When they originally started, they were really seeking the ultimate amount of yield that they can possibly get at the risk or trade-off of the share price quickly declining, as we can see down here, right? We can see the share price was going down very, very quickly. Now, I'm not an expert at options, but what from I gather is now they're doing protective puts, which give you downside protection at the expense of a smaller yield. Again, they were paying a much higher yield originally, so now the yield has dropped. The yield is still very high, so it's nothing to worry about, but now you're getting some of that downside protection. Now again, I'm not an expert at options, and this is precisely why I love dividend ETFs, because you don't have to be an expert at options. All you have to do is buy ETFs that have great strategies and that are paying a consistent dividend, and you allow the ETF managers to do it for you. But I still do like to look at the details and see what it is that they're doing behind the scenes, just to have an idea of where my money is going. All right, so I'm not invested into ULTY as of now. The only yieldmax ETF I hold at the moment is MISTY, MSTY, but I am considering ULTY now. All right, so one more thing I want to show you guys is there's a couple websites I like to use just to do an exercise of where your money can be in the future. All right, so what we did here is I went to marketbeat.com, dividend calculator. You type in the ETF, all right, it'll automatically populate. You type it in. I'll show you guys right here just so you get an idea. So you type in ULTY, all right, you click it, individual stock, distribution frequency, weekly. Let's assume you keep drip on, right? And let's say you buy 1,000 shares of ULTY today at $6.28 per share. So that'll cost you around $6,000, right? Now let's assume you do not contribute any additional money into ULTY, all right? Now let's also take the current yield of ULTY, which is around 79%. So let's adjust this to 79%. Expected annual dividend amount increase. Let's put that at 0. All right, let's just assume that it doesn't go up. All right. And then we do years invested. Let's do 1 year invested. So obviously our original investment starts off around $6,200 because again, 1,000 shares at $6.28 per share is $6,200. So we hit calculate dividends, and just in 1 year, your investment will almost double. Now again, this is assuming that the share price stays relatively stable around $6 per share, and the yield remains around 70 to 80% yield. Now these are a lot of assumptions. We know the market can shift at any point in time, but again, it's fun to do these exercises just to see where your money can be in the future, hypothetically. All right, and this is just 1 year. So in 1 year, if you go down here, you can see your 1,000 shares, you now own 1,790 shares because you had drip on, which is the dividend reinvestment plan. You did not contribute any additional money, but just with reinvesting the dividends alone, you acquired an additional 790 shares, and now you're making around $8,800 in annual income. And if we break that down on a weekly basis, because ULTY does pay weekly, we take 8,880 and we divide it by 52 weeks, and you can see that you'll be making around $170 per week with ULTY, assuming you buy 1,000 shares today and then you turn on drip and you never put another penny into it. And this is just after 1 year. If we go 2 years, we can see your balance jumps to 20 grand. All right. and your annual dividend income is now over $1,000 a month, obviously paid out on a weekly basis. And again, this is a lot of assumptions being made. This is assuming the share price remains the same, the yield remains the same, but it's still a good visual just to see where your money could be in the future. And also, this is another website I like to use, which is the dividendchannel.com. So here I have ULTY versus SPY. SPY ETF obviously tracks the S&P 500. And what I did is the start date I have at March, because this is when they went weekly. Again, if we go down here, we can see they've paid monthly through February. And then you can see March 7th to March 14th, that was the first weekly payment. So I just started it off at March 1st, right, up till now, July 6th. And this is assuming you invested $10,000, but you can do this exercise with any amount of money. And you'll see that ULTY, since they've adjusted, since yieldmax ETF managers have adjusted the strategy, you can see ULTY has outperformed SPY. Now, not only have they outperformed SPY, but they've also done it assuming without the dividends reinvested. ULTY is up around 13% since March 1st, and SPY, the S&P is up around 7%. Now, we did have a big dip here in April on Liberation Day, and then a big surge up. But regardless, ULTY has outperformed SPY since they've changed their strategy. And then if we look at dividend, assuming with dividends reinvested, they've actually returned 18%. So 13% without dividends reinvested, 18% with dividends reinvested. And this really just shows the power of reinvesting those dividends on a weekly basis and having that drip toggled on in your brokerage account in order to really, kind of maximize those returns in your brokerage account. All right. Now, one thing is, you're going to have to, if you're eventually at some point, if you plan on living off these dividends or using these dividends to pay for expenses, it would probably be wise to still reinvest a portion. So when the market is down for any extended period of time, you're still accumulating shares and growing that ULTY position. But this is true for any dividend ETF, especially these high yield dividend ETFs. But again, if you're just in the accumulation phase and you keep drip on and you just reinvest 100% of those dividends, I think you can really, really compound your money and really, really grow your brokerage account. All right, so I'm going to wrap it up here. You guys let me know in the comments, are you invested into ULTY? Are there any alternatives that are similar that you think may outperform? And what do you think about yieldmax being extremely observant of the market and aware and pivoting and adjusting and bringing in so much more money into ULTY? I know not too long ago, the assets under management in ULTY were under $500 million. They're now over $700 million, close to 800, and we'll probably see $1 billion of assets under management before this year ends. So again, you guys let me know in the comments, what do you think about ULTY? As always, I appreciate you stopping by the channel, and I will catch you in the next video.